Eimear Daly is a currency market analyst at Monex Europe. Great to have you here, Eimear.
Thanks for having me.
I wonder why you think we're going to see people switching from euros and dollars and into the pound. More people doing this.
I think the pound is really starting to show some strength. I guess as a safe haven currency, the Bank of England is now the only central bank that hasn't really intervened. I think they're kind of more targeting specific areas towards the credit market, which puts another round of QE on the back foot for a few more months.
So they're trying to get money to businesses in different, more creative ways, not through QE. So you don't expect more QE from the Bank of England?
I think they'll use it as a last resort, maybe coming up to December. However, I think they're focusing more on a funding for lending scheme, which is directed to getting credit flowing to the real economy.
It's strange to talk about the UK as a safe haven, isn't it, when you consider that actually its budget deficit is supposed to be like 7.8% next year, which would be bigger than Greece and Spain. And all of this is despite the fact that it's got the ability to devalue its currency. How do you square that circle?
I think we've kind of seen in the markets that there's these odd safe havens. If you look at the US dollar, look at US debt levels, I think they're near 100%. Japanese has a debt level that compares to no other.
So it's the least dirty of the dirty shirts,
kind of thing. It's the least dirty, yeah. I think it's an ugly game with the market, so it's the least ugly currency wins out.
And what about the UK economic prospects? Are they improving? 3 straight quarters of contracting growth. Is there any reason to be optimistic on that front?
I think there is better underlying strength that's really showing up than in the GDP figures. We have a lot of external factors such as bad weather conditions, which may sound like excuses. We've seen the labour employment is much stronger than GDP growth would have us believe. We also see they're closing off the budget gap. They're closing off the trade balance deficits. There is really strong signs.
I suppose that's where they sort of differ from the US, and that the UK government has a plan to get the budget down, and here the US is still looking at a fiscal cliff.
Yeah, I guess the UK as well has really, won some credibility with the markets. They have enacted really what was a voluntary austerity plan to really get debt levels down and really tackle that before the markets, turned bearish on bond markets.
So the pound going to be higher against both the euro and the dollar. Which is it going to make more gains on?
I'd say, obviously, I think the euro, I think there's more problems to come in that area, so we will see a stronger pound against the euro. But I think we will hold up at higher levels in cable.
Euro dollar, let's look at that, because you smell danger here potentially. You say the level that it's at here around 130, that suggests that markets are drugged up on liquidity.
Yeah, I think we're kind of coming off the OMT feel-good factor, this big euphoria that came up from the ECB bond buying program. And also a huge factor of the levels we're seeing at the moment is a result of QE3 in the US. I think right now we're starting to see that sharp pullback in the dollar, and that's driving euro dollar down.
Interesting also that you have, I think, shorts for the euro at the short bets at the lowest level, I think, since November. We saw a lot of short covering, didn't we, in the euro? Do you think that trade is done?
Yeah, I think we might actually see buyers kind of take profits at the moment right now because it's at such a high level. So they might be kind of like, this is the extent of the rally, and let's kind of.
So where does euro dollar come down to between now and the end of the year?
I think we have seen a fundamental change in what's going on in the eurozone, and we have kind of shored up solvability and this premium of convertibility risk. So I do think maybe we'll end the month at 127. I do foresee a weaker dollar towards the end of the year coming up to the fiscal cliff.
So it's really more about the weaker dollar, isn't it? Because you have a few things going on. You have QE, the QE3 that the Fed's just launched, and then you say we're going to get even more QE in December. Is that sort of something to make up for the fact that Operation Twist is due to end?
Yeah, Operation Twist will end right in December, which really unfortunately coincides with this big fiscal cliff. So you have, monetary easing is going to slack by about 45 billion each month when we come up to the fiscal cliff, as well as this dramatic cutoff in spending and increases in tax. So I do think the Fed will use this kind of opportunity to do another QE4.
So you've got a double whammy. You've got QE, and then you've got the fiscal cliff in the U.S. And when it comes to the longer-term outlook for Europe, I just want to come back to this. You're not convinced. You say that, yes, things have improved because now we have potential solutions to the problems, but you're not convinced that these are the right solutions. Is that right?
No, I think it's a temporary fix. I think if Spain goes into a bailout and maybe it struggles to meet its reform targets, we could see the ECB put in that awkward position of having to pull support out from the Spanish bond market. And that's only going to lead the euro to trade lower. This isn't the end-all solution, definitely, to the euro crisis.
And it's dangerous, you say, to mix the politics and monetary policy, which is effectively what would be happening.
The ECB really has been the only functioning body of the eurozone. It's been a real, rock in the euro crisis, and now I think we've kind of entered the really nervous territory of having it basically decide if countries are meeting targets.
Okay, all right, we're going to have to leave it there. Eimear Daly, Forex market analyst at Monex Europe, thanks for coming in today.
Thank you.